You're welcome to Baptek Academy. Today we're going to continue from where we stopped from our previous class. So from our previous class, we were able to look at. Reduce your volume. Okay. We looked at. Hello guys. Let's signify if we can hear ourselves clearly. Loud and clear. All right. Thank you so much. So please just for the purpose of clarity, let's mute our mic at the moment. So when it's time for questions and all that, we can unmute them. Thank you for understanding. So from our previous class, we looked at the introduction to forex trading. I'm just going to reiterate a little bit, then we'll move forward because there is a video for the previous class. So if you actually missed it, you can actually just check back on the video and get up to speed. All right. So we looked at introduction to, then we looked at what is forex. We looked at what's forex trading. We also looked at who can trade forex. We said everyone, individuals, institutional traders, corporations, governments also trade the forex market. We also looked at when we can trade the forex market. We actually explained there are four major sessions in the forex market. We have the Sydney, the Tokyo, the London session, and the New York session. We explained all that in our previous class. Then we also started looking into some of the terminologies that we can't do without when it comes to forex trading. So we looked at a broker, what a broker is. It acts as an intermediary between the retail trader and the market. And more explanations were done on the previous video. Then we also looked at some of the functions of the forex broker. We said they provide trading platform, they facilitate transactions, they offer leverage, they also provide market analysis and research. Then we also looked at leverage on the other day, our previous class. We explained that leverage gives us more buying power. All right. So if we have some little amount of money, the broker actually gives us leverage that gives us more buying power, which makes us take bigger lots in the market, bigger positions in the market. We also looked at equity the other day, and we explained mathematically that equity simply means your account balance plus your floating profit or loss. That is, if you're having running trades and if they are in profit, your equity will be equal to your account balance plus your running trades that are in profit. If your trades are running in loss, your equity will be your account balance minus the running trades that are in loss. So we explained all that in the previous video. Then we also looked at ask and bid price. We also got practical illustrations on ask and bid price. We can check on the previous video and we can get all that explained completely. We also looked at the spread. We said the spread is the difference between the ask price and the bid price. And most likely, most of the occasions, it's actually the broker's profit. All right. It's actually the broker's profit, the profit the broker makes from our positions we take, our sell positions and buy positions. Now, lastly, in the last class, we looked at currency pairs. All right, we explained what currency pairs are. We say they are usually it has to do with currencies of two different nations. They always come in pairs. All right, of which we explained we have the base currency and we have the quote currency, and we also explained that um the amount of the figure given to any currency pair is actually the quote currency being quoted against the base currency. So we simply state that for example, on this illustration we gave last on our previous class, we said one euro is actually equal to plus or minus 1.08 thereabouts dollars. So we are simply saying $1.08 is equal to 1 euro. So the base currency is always in one unit, all right? Then the quote currency is actually quoted against the base currency depending on the current exchange rate. All right, so this is where we stopped last week. Yeah, so today we're going to continue. We're going to proceed looking at long position. Are we together? If you're following up, just drop your your favorite emoji on the chat box. Just drop and let's know we are all catching up together. We are all catching up. Okay, now let's look at the long position. We said going long refers to the act of buying a currency pair with the expectation that its value will rise. Right? When a trader takes a long position, they are essentially expressing optimism about the base currency's appreciation relative to the quote currency. Now, okay, now we're going to take an illustration. I want us to be more practical, so it's not just about the theoretical aspect. Now, talking about no, this is currency pair, sorry. Now, taking a long position, it simply means you want to buy a market. So when you say long, it's like it simply means to take a buy position. All right. Now we're going to look at these are series of markets, but we're just going to look at one. Now, if you let me go to the lower time frame. Though this is not currency pair, all right. This is synthetic indices, but it's still the same thing, all right. I will explain better when we get deeper into it. Now, remember last week we explained the ask and bid price. Now, if we all can see closely, we see two lines working together. The top one is red color and the one at the bottom is green. Now, the red is the ask price, all right, and the green is the bid price. That means, for example, looking at this market in a short run, let's say from my prediction, I can say, okay, I can sell this market, I can go short in this market for a few minutes. All right, I can actually short this market right now. Now, this is remember we're talking about long actually, but the long and the short is just the opposite of each other. Now, this is the short position. We said it refers to the act of selling a currency pair with the expectation that its value will fall. So if someone says, for example, like we said, we will be giving signals when the time is right. All right. So if we say short a particular pair, it simply means look at your chart and sell. All right. If we drop a signal and say short a particular pair, it simply means you should sell. So in this case now, I can just okay. Someone might ask, how did I, especially I want to believe that some of us are newbies here. So um though we've not gotten to the point of explaining the trading interface, but since we are here, I just want to show us how to do this. Now, let's say just for a moment. Now we have some icons up here. We have some icons up here, all right. Now the icon I'm pointing at right now, if I click on it, we are going to get the short, like the short and the long buttons, all right, tabs. So just look at it. I'm going to click on that, and now we have the buy and the sell, all right. And I said this market, I would have waited a bit for it to get up a bit, then I would have short this market, looking at the some part of like the overall trend of the market, all right. So now if I'm shorting it, I will just click on, oh sorry, let me show us how to do that. So now this is short because I believe the market should go down. I was seeing it, so I just click on, I will set my volume, that's my lot here. Those 0.5 we are seeing here is actually the lot size we used to enter the market, 0.5. We can actually set it with this. Let me take this off so we don't have so many stuffs on the screen. Now with these arrows, we can actually click on the arrows. If I want to increase the lot, I can click on this arrow and reduce it or increase it, all right. But just for little explanatory purpose, these are the arrows you can use to change the lot. Then if we want to sell or buy, we can click on the buttons for buy or sell. All right. So that's about the buy position, the long end. Whenever you hear long, it just simply means you should buy. That's the trader having an expectation that the market should appreciate, the market should increase. All right. Then if you hear short, it simply means you should sell because you're expecting that the trader is actually being optimistic about the market falling down massively. So this is simple illustration for long and short positions. Okay, and the next thing we are having is we have stop loss. Okay, we're having stop loss. Now, a stop loss is a risk management tool that helps traders control potential losses by automatically closing a position when the market reaches a specified price level. All right. So, hello, please mute your mic if you just joined us. You're welcome. Please mute your mic. Thank you. So, talking about stop loss, it is actually a risk management tool. All right. For example, this is stop loss we want to explain. So let's go back. Let's be more practical so that even though we can't understand the theoretical aspect, the practical aspect is going to help us better. All right. So now we're talking about stop loss. Now let's say I'm looking at the market, I'm analyzing. Okay, like I said, I expect that the market should go down a bit. But if I want to set my stop loss actually says, okay, this is the amount I am willing to risk. Now, note this, you are actually expected to calculate how much, you're expected to know how much you are willing to risk even before you take your position. That means you should be able to be satisfied. Okay, let's say I have $500 in the account. Okay, I am willing to, in this trade that I'm about to take, okay, I am willing to risk, let's say $30 or let's say $50. So you should know how much you're willing to risk before you take the position. All right, that's going to make you a better trader. So let's say, looking at my structure, I will say now with this icon, okay, now this is how we're going to do it. It's very simple. It's very simple to use the interface. I know we've not come to the point of explaining the whole interface for us, but it's very simple. Now, let's say, looking at my chart, I would say I would keep my stop loss above this recent high. That means if the market breaks this recent high, I will assume it has changed direction. So it should take me out of the market. It's very simple. That means if it gets up to this point, take me out. I'm not willing to risk too much. Are we getting it? That's just the stop loss. It's very simple. So I can just click on my position, the trade position. Let's do that again so that everyone can see us. Remember, this is our position. This is where our position is, right? So now it's very simple. Just click on the position. Just click on it. And there is a tab that came up. This stuff came up. I hope you can see this clearly. We have close, we have SL. SL stands for stop loss. Then we have TP. TP is for take profit. All right. And right now we are about setting stop loss. So we'll click on SL. Are we together? If I'm too fast, please let me know so that I can slow down a bit. But I think we are cool. I believe we are getting ourselves. If we are together, just drop something on the chat box. Let's know that we are together. All right. But let me continue with the stop loss explanation. So what you do is simple to set stop loss. You click on the trade, the running trade, then this tag comes up. Look at the SL. So you click on the SL. Now it's just for you to move it wherever you want to place it. All right. And I said this is our recent high, is where I expect to keep my stop loss. So I'll just keep it a bit above the recent high. So if the market breaks that high, it should take me out because I'm not willing to risk too much. Are we together? And for the sake of this video, let's just set the TP at once, because after the stop loss is the TP. And remember, the TP is actually a predetermined, is an order, a pending order that you actually drop at a particular market price, expecting that if you run into profit to that extent, to that particular point, the system should automatically take you out in profit. All right. So now let's click on the TP again. This is the TP. So now we are going to click on the TP and we are going to set it. All right. So now we click on TP. Now it just came out. So now we'll just move it to wherever we are comfortable with. Now I'm going to keep it as this at this recent low. All right. And I will now click on this arrow. Now this position, the stop loss and the TP, they are not set yet. Remember, they are still floating. Look at the tag on it. This that round button like stuff there, you can still move it like you've not set them. All right. But what you now do is you now click on this arrow. You click on this arrow, all right, then this arrow will now take us to the page where we will modify to actually pin our stop loss and the take profit at the points we have set them. All right. So we'll click on this arrow, and now at this page you will now just click on modify down here. I'm sorry, this page is kind of covering you, but we have modify down here. I hope you can see modify here. So what we'll do is we'll just click on modify. Okay. Now it's okay. Now this is a new feature that MT5 just brought up. So now if you now we've actually modified the trade. We have our stop loss active and our take profit active, but you're not going to be seeing them again. All you need to do is just click on the position, the trading position. Remember, this is our position. This is where the position is. This is it. All right. So just click on the position and our stop loss and our take profit will pop up, telling you that we are here even though we are kind of invisible at some point. Are we together? So this is how we use stop loss and take profit to manage our, that's the stop loss, we use it to manage our risk, and the take profit is actually, even if we are not here, if the market runs in profit and gets down, if the market runs in profit and brings us down, the moment it gets here, it will close our trade automatically and we will close in profit. Do we get it? It's very simple. This is just how the stop loss and the take profit works. All right, now let's go back to our page. So now we've talked about the stop loss. Let's just reiterate one more time. The stop loss is a risk management tool that helps traders control potential losses. We don't want to lose too much, so we can set it where we want. So if it's going too much, it will just take us out. All right. Then we talked about the take profit. It's actually an order placed by a trader to automatically close a position when it reaches a certain predefined profit level. So like the one we just set now, when it runs us into massive profit, when it gets to that level, we've placed our take profit there, it should just close us out in profit. All right. Look at, we said it is a tool used for management, for risk management, to secure gains and lock in profit. So immediately it gets to that point, it will close us out in profit. All right. Oh, it's clear. Stop loss and take profit. Now we'll be looking at the next thing we have. Okay, now we're having risk to reward ratio. The risk to reward ratio in forex trading is a measure that helps traders assess the potential profit relative to the potential loss on a trade. All right. Now, let's not do too much theory. Today, you have to be practical so we can actually understand better. Practical is more better. But it says it expressed as a ratio and is an essential element of risk management strategies. Now, let's go back to that page. With that, we can explain like this trade we took now. Let's look at the risk to reward ratio on it. Now, if it was trading, this is um a different platform from trading view. This is MT5, all right. But if it was trading view, you can actually immediately click on it, you can actually see the ratio, the risk to reward ratio, all right. But in this case, you can simply calculate it. For example, how do we calculate, how do we know the risk to reward ratio? In this case, you can just, even if you're not getting the exact figure, you can just approximately get the risk to reward ratio in this case. Now the stop loss, if you look at it around here, the stop loss value is here. They said we are risking, let me do that again. we're risking about $3.81. All right, $3.81, and the take profit here is about $8.23. Now, plus or minus, this is like it's around more than 2.5 risk to reward ratio, meaning we are risking this is more than 2.5 risk to reward. Okay, so let's say okay, not up to 2.5 but 2 point something. Now this is let's approximate the stop loss to be 4, just an approximation. All right, then the TP, let's say, is 8, so that's like 1:2. So the reward you are having is 1:2, meaning the risk, we are risking $4, something close to $4, to get $8. So it's actually 1:2. So if you're willing to, always make sure that you have a good risk to reward plan. All right, a risk management tool, make sure you have a good one. So whenever you're willing to lose, for example, if you're willing to lose $10, you should at least be making up to 20, 30, $40, as the case may be. So this is how the risk to reward ratio works. So from the amount you're making, the amount you're willing to lose, you should have at least times 2, times 3, times 4, times 5, as the case may be, of what you're willing to risk. All right. In this particular case, we are risking close to $4, and we are making close $8 plus. All right. So this particular ratio is around 1:2. I believe this is well understood. So this is majorly what the risk to reward ratio means. Any amount you're willing to risk, at least your reward should be times 2, times 3, times 4 of what you're willing to risk. All right. Let's look at the next thing we're having. Okay, now we're having pending orders. Pending orders. And we said pending orders are instructions given by a trader to execute a trade only if the market reaches a specified price level. All right. It's actually an instruction we give to the platform if the market reaches a specified price level. Now we are going to explain that more, but we have, just note, we have several types of pending orders. All right, each of them having their specified purposes. Now let's look at one of the types of the pending orders. We're going to explain better when we look at the charts, and practically we all are going to understand better. All right, now the first one we're having on the list is buy limit order. The buy limit order, the purpose, let's pay attention to this. We'll read this, we'll go to the chart, and we'll explain. All right, we say placed, the purpose of buy limit order, it says placed below the current market price. Take note of these stuffs. Yeah, buy limit order is placed below the current market price. This order is used when a trader expects the price to decrease to a certain level before potentially reversing and moving upwards. All right, and the execution of this pending order, buy limit order, it says it is activated when the ask price reaches or falls below a specified level. Now let's go to chart and explain all those too much English. Let's just go and make it easier for us to understand. Now, okay, let's look at a market that will can make us get a buy limit. Now it's buy limits we're looking at. So okay, let's look at, no, most of these markets are selling. I don't know about this market. Hello guys, don't worry about the fact that we are not using currency pairs, but we are going to trade all markets. All right, as it's pretty late, we are going to trade anything short. They are all the same thing. Okay, now okay, this market is not giving me what I want. Sorry. Let's look for another market. I think I'm selling this market. I'm not supposed to get. Okay, but for the sake of illustration, we are going to, where is the current market price? Okay, now let me illustrate with this. Uh, Now look at this market. The market is actually on a downtrend, all right, but just for the sake of this video, let's say I want to set, let's just say I want to set a buy limit order in this market. Okay, So what I would do is look at this current recent low. Look at this recent low here. I expect that if the market gets down here, it should bounce back a bit. All right. So now what I will do is I will set a buy limit order here, instructing the system that even if I am not here, let me use a cross here. Sorry. Now I want to instruct the system that even if I am not here looking at the chart, if the market gets down here, it should open a buy trade for me. That's a long position for me. Let's get used to the terms. They are very simple. So and now I want to take a buy limit here, buy limit order. So what I'll simply do is look at this icon like a timer. Yes, this is the icon I will use. Yes, this particular icon up here. I'll click on that, then I will come and set the buy limit order there. So we'll click on this here, this particular one. Okay, now I will just move it. All right. Now look at it. This is the buy limit. So I would love to set it around here. So this is now a buy limit order. Okay. Now we've not actually placed it. You can still move it. All right. So but this is simply what it means. A buy limit order, the order must be below current market price. Remember, with the expectation that if the market gets down to this point, it should long a bit. Sorry about that. So you're getting the execution procedure for the buy limit. It must be below current market price. This is where current market price is. We're seeing the current market, the value changing. So we expect that it should come down here, trigger our long position. Then if it longs, yes, we will be in profit. All right. So now, same way we took the other position, what we'll just do is we will now um, we'll just click on this arrow. All right, we'll click on the arrow, then we'll go and modify it. It's that simple. So after you place it at where you want it, we'll just click on the arrow, then we'll just click on place down here. um this place down here, we just click on it. It modified. It's a buy limit order. All right. So now if this market falls down here, it's going to trigger our long position. So this is simply what a buy limit order is. Now, when you take your position like this, you are always expected to set, even if you're not setting your TP, that's your take profit, you're expected to always have your stop loss. All right. This stop loss, don't joke with it. It's very important. Now, let's go to the next pending order we're having. So we've discussed the buy limit. It will be what it plays below the current market price. All right. So when the market gets down there, it triggers our long position and we go. Now the next thing we're having is a sell limit order. This is just the opposite of the buy limit order. All right. So in this case, the position is placed above. Okay. The sell limit order, in this case, it is placed above the current market price. This order is used when a trader anticipates the price to increase to a certain level before potentially reversing and moving downward. All right. And you see in execution, it is activated when the bid price reaches or exceeds the specified level. Now, this is sell limit order, meaning we expect the market to go up to an extent, but when it gets to that level, we expect that it should short. That means we're going to take a sell position. All right. Now, let's quickly go to the chart and have an illustration of it. It's very simple. It's just they are all simple terms. Now in this case, this is just an illustration. I'm having sell positions running, so sorry, I will just delete this buy limit order. All right. So let me just take it off. Then let's check another market where we can actually get a sell limit order. So we'll go to chart. Oh, I need to explain this. Now these are the markets in this case. So anyone you want to look at, you can just pick any one of your choice. Now I want to go with VIX 75. All right. So I'll just click on VIX 75. Then in this page now we have new order, chart, properties. We will come to explain all these when we get to the aspect of explaining the trading interface. All right, we will explain every icon we are seeing here. So don't worry, everything is at your reach for free at this moment. So we are going to look at charts. We want to analyze the market before we take. So we'll just click on charts here. Click on charts. Now this is the chart for week 7-5. We're looking at sell limits, right? Okay, now just for the purpose of illustration, I'm seeing some gaps here. So I expect the market to just fill it up. So what I will say is, remember when we are taking our pending position, pending orders, we'll come to this icon up here. We'll click on this icon and then we will what? Move it to the expected region where we want it. So in this case, for the sake of quick analysis, I'll just click on this tab here. So now this is what we have. Now I expect this market to, for the sake of this class, I will just keep it here. All right. Now this is a sell limit order. I'll just keep it here. So hope if it gets back up here and taps on my sell limit order, I expect it to still sell massively. It's actually on the downside. All right. But I just expect some feelings to be done in this market. So I'm just going to keep my sell limit order there, and then remember how we set it. We'll just come click on this arrow and then we what? Just click on the arrow, then we what? We click on place. But I think this lot is too small. I can just increase it however you want it. Then you just click on place. All right. Okay. So now we have our sell limit order with the lot size of 0.005. Someone may ask, what is lot size? Don't worry, we are coming to that. We will explain all that. It's very simple. Okay. So now this is the sell limit order. Remember, the sell limit order is always above current market price. This is our current market price at the moment. This is the current market price. You can see the figure here moving. It's moving. This is the current market price. So sell limit order is always above current market price. We expect that it should go up a bit before it starts selling massively. So if it gets to our position, it will trigger our sell order. Then it starts running us into profit. All right. So that is about the sell limit. Let's quickly look at the next one. Hope we are getting some. Hope we all are following. It's very simple. All right. We will still do more of it. Now the next thing we are having is the buy stop order. This is also another type of pending order. All right. We say the purpose of the buy stop order is it is placed above the current market price. This order is used to enter a long position once the price surpasses a particular level, indicating a potential upward trend. Now this is the buy stop order. It is placed above current market price. All right. Now let's go to charts. We will explain the buy stop order. It is very simple. Let's just go to charts. Let's go to charts and we'll look for a buy stop order. Should we look at stepping distance? Okay. Now a buy stop order. No, this market is expecting something else from that market. Let's just look for a market to, for the sake of this video, we won't actually. Okay. Now in this case, okay, this is from 300, seeing some space up there. Now I can actually set a buy stop order in this market with the intention that, where is my icon, with the intention that if it breaks this previous high, if it breaks it upwards and it still moves up, I can place a buy stop order, looking for a tool to pick, can place a buy step order around here. So as if it continues upward, it should trigger my buy position and it keeps going. Why someone will ask, like, why do you expect this market to go up? It's not time for analysis yet. When it's time, we will share it. But we can actually set our buy. So remember how we set our pending orders? It's simple. We click on those icon here. We just click on it, and okay. Now in this case, this icon is giving us just buy limit and sell limit. there are several ways we can still get it. So now this is boom 300. So we'll go back to boom 300. Where is it? Now we'll click on it. Just click on the market and we'll come to new order. All right. Um, this is new order. All right. So what we'll do is, oh, sorry about that. Okay. So what we'll do is we'll click on new order here. Okay. We'll just choose new order. Click on new order. Now on this page, um, we have market execution here. We have market execution here. Okay. Now this is market execution up here. So now what we'll do is we'll click on market execution and we'll change it to buy stop order. All right. So just click on market execution and we are looking for buy stop limit. Sorry, buy stop rather. So this is buy stop. Okay. So we'll just choose buy stop. We'll buy stop. Now we didn't even get the figure yet, but let's assume this is the current price is around 1036 point 4 or 56 thereabout. That's the ask price. So I will make it 1036. So I will make it, let's say, just for the sake of this video, let's say we make it 1050. Okay, say if it gets up to 1050, it should trigger a buy position for us and we can buy along with the market. All right, we can long. So now we'll just click on place down here. um, okay, this icon is covering it up. Now this is place, so we'll just click on place and we have set our buy stop order. So we'll go back to chart and we'll now see this is a buy. It's almost at the tip. Remember, we didn't check the price before going to set it, but this is what I mean. If now I can go back and adjust it. All right, go back and adjust it higher a bit. So I'm expecting that if it breaks that resistance up there, if it breaks it, it should continue longing, should be going up while I be in profit. All right, but it's simply, this is how we set the buy stop order. That's about the buy stop. Okay, now so it's always above current market price. All right, we expect that when it breaks a resistance, um, we expect still an upward move. We will take the buy stop.